Hello traders and welcome to the London Forex Broadsheet's daily video wrap of the markets for Monday, July 28th. The euro rose against most major currencies in overnight trading even after the August index of consumer confidence fell to 2.1. This is the lowest since June 2003 and off of a high of 3.6 in July. German inflation, driven higher by rising costs for food and energy, rose to 3.4%. Limiting consumer discretionary income at the same time as the strong euro crimped demand for German exports. We can see replication of the moves made back in early July, but back then the euro was running on the anticipation of the ECB raising rates. Right now there is nothing but negatives coming out of the eurozone. Unless 1.5800 breaks topside soon, we may see a 61.8% move to 1.5580. The pound gained against most major currencies even after HomeTrack reported that home prices fell 1.2% in July. This brings the annual loss to 4.4%, which is the most in 7 years. The company said it was likely that prices would remain under pressure until autumn. Demand for housing has declined 20% in the past 3 months, and prices have declined to levels last seen since October 2006. Supporting the pound was the widely followed National Institute for Economic and Social Research, who opined on Friday the BOE needs to increase rates by 25 basis points. The cable held the extended support trend line drawn between the lows on June 13th and July 8th. The 4-hour trend line is holding, and holding very well for a UK economy that looks to be going through a contractionary phase. Short traders must look for 1.9800 to break and hold for a session, and long traders are looking for 2.0030 and 2.0070. The Aussie rose, reversing 4 days of losses as gold and other commodities advanced during the New York trading session. The extension of the trendline support drawn between March 20th and June 12th was successfully tested after the Australia and New Zealand banking group said it set aside additional funds for bad debts linked to the U.S. credit market losses. The next economic report scheduled to be released from Australia is the leading index tonight at 2000. There is a great linear trendline in place here, and a great stair-step lower to come if Australian economics follow up with poor releases over the coming weeks. This pair is at huge support right now, and breaking 9,500 does seem to draw in 30 to 40 pip runs. The loonie continued to rise as crude traded between small gains and losses during the New York session. The pair broke the trendline extension drawn between the highs on June 10th and July 7th and 8th on Friday, and tested support near there during overnight trading and found resistance near the highs made on May 2nd and July 1st. The sleeping giant has awoken and moved higher in a sneaky run that came in under the radar. We now have a pair at a major resistance area that has moved as much in 3 sessions as it has in 3 weeks. Take care here, reversal or breakout. One or the other is bound to come soon. The Swissy fell as traders bought treasuries on a bid for safer investments. The 2-year note fell 12.1 basis points to 2.69%, while the benchmark 10-year lost 7.7 basis points to yield 4.02%. This is a pair that just does not want to get sold off, and reflects very well the market's desire to hold on to treasury yields even in the face of savage equity markets. If 1.0420 goes heading north, we may have found a bottom for the year. The yen fell as U.S. equity markets declined. Japan's export-driven economy experienced its first overall decline in exports in 55 months during June. Shipments to the U.S. have been falling for the past 10 months, starting when the dollar-yen was in the 119 area, but June's decline was the biggest since November 2003. Given the current U.S. economic situation, it would seem to be fairly certain that demand is likely to remain constrained over the medium term. So Japan could well be inclined to do what any seller of goods does when demand slackens: discount the price, which in this case means depreciating its currency. This pair will just not give up, and the markets have really been trying over the last month. Look to buy it on positive equity days. On the upcoming economic calendar, out of Great Britain we have mortgage approvals at 0430. At 10 a.m. we have the Consumer Confidence Index out of the U.S. and at 21:30 we have building approvals from Australia. In Asian equities, stocks traded mixed. Japan's Nikkei 225 added 10 points, or 0.07% to 13,370, and Australia's S&P ASX 200 index lost 81 points, or 1.63% to 4901. European stocks closed lower on concerns regarding credit-related losses. The Dow Jones Stock 600 fell 1.1% to 278. On the day, the FTSE 100 lost 0.8%. The CAC 40 lost 1.2%, and the DAX lost 1.3%. Wall Street closed sharply lower on further concerns regarding the financial sector. The Dow was at 11,131 after falling 239 points, or 2.11%. The S&P closed at 1234, down 23 points, or 1.86%, while the Nasdaq finished trading at 2264 with a loss of 46 points, or 2%. Crude oil futures for September delivery rose $1.47 to settle at $124.73 a barrel after a Nigerian pipeline was attacked by militants. Gold rose for a second day. Futures for August delivery rose $3.30 or 0.36% to close at $930 an ounce. Treasuries rose as traders sought the safety of U.S. debt. The 2-year note fell 12.5 basis points to yield 2.577%. while the benchmark 10-year lost 9.1 basis points to yield 4.016%. Overall, if you want to be a dollar bull, your job probably got a bit tougher. An administration official said the U.S. budget deficit will widen to a record $490 billion in the fiscal year which begins in October. That's just over 20% higher than the $407 billion originally estimated last February. Smaller tax receipts, projected to be lower due to the economic slowdown, the fiscal stimulus package, and costs for wars in Iraq and Afghanistan were cited as the main reasons, but weren't the only ones. The growing costs of Medicare, Medicaid, and Social Security, which took up about 40% of the federal budget in 2007, were also projected to rise. This concludes the LFB review of the global commodities market. Please join our team tomorrow night as we again help you set up your trading day. And remember, if you're into the Forex, you need to be into the LFB.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.